We back for Every Pay Squad. This is Market Making Monday, episode 21. We are here and we are ready and we are set to go. So, this week's episode, we're going to talk about last week and the big moves that happened in the market and what to expect for the upcoming week. So, you already know how it goes. Run my intro. Hey friends and new traders, welcome back to the channel. If you're new here, my name is Matt and I teach day traders just like you how to become successful by teaching different tips and strategies. With that being said, let's get to it. So last week, at the end of last week, we had some major moves, a lot of major moves. Just go to the daily for a second. Let's start with the New Zealand dollar. I'm going to clear up my chart a bit. Last week, Friday, we had this major move off of news release on Friday. Crazy. The market just completely fell out the sky. Let's see how many pips this move actually was. So the move on Friday was about 153 pips. That is insane just for one day alone. So for New Zealand dollar, you could clearly see that the market has been struggling to break this area of resistance. If you go back, you clearly see that we're at a level of resistance. This whole entire area right here is a level of resistance. You can see that it rejected it right here, rejected it over here, rejected it, and rejected it like 3 weeks in a row. So what could we possibly see right now? We could possibly see a movement to the downside. One thing I will say for sure, if we see a break right here, so we got a break on the 4-hour, and if we get this low taken out, for sure we're gonna see, or even right here, this key level right here that I have marked off, we're definitely gonna see further price action down to the downside, possibly filling in these areas of liquidity. As you can see, it's been a while since price has been down here at 5.9, you say roughly 5.95 psychological level of 5.95. There was no test of this level as well. Like the daily candle has not come back to test this last high over here, and we have this return candle right here as well, and we do have a little gap right here. If we go to a higher time frame, we can also see that there is this huge gap right here in the market that needs to be filled at some point in time. So what the market could possibly do is come back and fill this and then continue back up to the upside. Like I said, for the last couple of weeks, I was expecting for price to possibly clear this area and then fill these gaps up here, but it's been struggling week after week to clear this area. So we might be in need of a pullback before we go any higher. If we pull out the Fibonacci on the weekly from this low to this high, you can see that price did not come back to a retracement level. So price probably does need to come back to a retracement level before it does go any higher. It might come back to the 38.2, or it might just come back down to this area right here to fill in this gap. Break it down on a daily. Let me just see if there's any like key levels that could match this area for a possible place where it could bounce off of. So I'm not really seeing anything on the daily. Let me zoom out. So we do have a little bit of resistance right here. Checking the pass. We do have resistance, support right here. Sorry. We do have support right here, right here, and right here, and right here. I'm just gonna mark this level off just for future reference. So I'm gonna mark it at, just to be clear, the psychological level, because that's what the banks love to trade off of. So that is a key level and a level of support and resistance. You can see that we had resistance right here. Resistance, support, resistance, support, support. So clear level of a clear level where the market could possibly pull back to. If it does need a pullback, we do also have a confluence of 61.8 if the market does decide to make that long-term, short-term move to the downside, and then long-term back up to the upside. Nothing is ever set in stone. We just take the market as it goes, take what the market gives to us. So yeah, so weekly we could see that it's kind of been in consolidation. We did have this big down candle, bearish candle to the downside. So if you could take out this level right here, then we could possibly see the pullback down to the 61.8 retracement. So yeah, so back to the 4-hour. Second. Take out this Fibonacci. Take off these levels right here. These are just psychological levels I have right here. Yeah, so back to the 4-hour. So you can see that. So pretty much basic market structure. We had this low. We made a high. Made the low. Consolidated a bit, and then we made the next high. A higher high. And then we took out this high, because we took out this high, so it made a higher high. Failed to go any higher. If you look at the daily as well, something that I always talk about is the 3-drive pattern. 3-drive pattern on a daily is really strong, especially if you see it close to a key level, key area. So we have 1 drive, 2 drive, 3 drive, and we even got the 4th drive taking out this high. Or it could even be 1 drive, 2 drive, 3 drive. So every time it makes a drive, it takes out the high. So this high took out this high, and this high took out that high, and then it broke lower. So okay, so on the 4-hour, we broke structure. Clear as day, we broke structure. So this was the last low. High, low, high, high. Yeah, so we broke structure. You could even say we broke structure right here if you wanted to get in even earlier than that, but the market just melted. So I didn't really have an opportunity to get in. I could have get in once I seen the break right here. Probably on the lower time frame, we could have seen the retest of this key level. Let's check that out. Nope, we didn't even get a retest of that key level, so there's no way of getting in on this this pattern right here, on this drop right here, which is okay. You don't ever really want to chase the market. You always want to wait for the retracement back. So seeing that we broke a key level right here or right here, whichever way you want to put it, structure was broken. So we could pull out our Fibonacci, and for the Fibonacci retracement, this is a key level that I had marked off for the last couple of weeks. You could clearly see that the 61 retracement kind of perfectly aligns with this key area. As well, we have a trend line. It was kind of broken, but it was still respected because you could see that it came back down once it broke above and tested it a few times before dropping lower. So we could expect price to possibly come back to the 61.8 and then possibly look for further down movement. We could also look for a possible counter trend trade. I don't really teach that much because for new traders it could be very difficult. But say on the 1 hour, say on the 1 hour we have a breaker structure right here. Simple. Once we see a breaker structure right there, like the structure breaks right here, we could simply just wait for the pullback and then buy up into the 61 retracement, and then we could do the sell instead of waiting the whole time. That is something you could possibly do if you're impatient and you don't want to wait all those hours just to get that 61.8 retracement. But the thing about the 61.8 retracement, you definitely know it's going to be 61.8 retracement on the way the market moves up to it. It's not going to take its time. It's going to just be like a few 4-hour candles, maybe like three or four 4-hour candles straight up. It's not going to be, this is the 1 hour. So on the 4 hour, you're probably just going to see like something like this where it's just like headed straight to it. It's not going to be consolidating on the 4 hour. So you definitely see like solid 4-hour candles straight to the 61.8 and not any up and down movements unless you're on the 1 hour time frame. So that is a simple time frame correlation, just knowing where you are during the trade at all times. So, or next thing, we could simply just wait for this area to break, which was another key level. Could wait for it to break above, retest this level up into the 61.8. So you could enter on the retest right here and then ride it higher, come out the trade, and then look for the sell. So that is Market Making Monday episode 21. So I hope you guys found this video very insightful. Please like, share, comment, and subscribe to the channel. Leave comments down below. Hit the notification button. So I hope you guys enjoy the rest of y'all day, evening, or night whenever you decide to watch this video. And I am out. Peace.